Well, crude had hit a 5-week high of around $61.50 per barrel, but it has now retraced some of those gains. Manisha Gupta joins us to discuss more on that. Manisha, over to you.
Well, thank you so much for that. Yes, we are looking at second straight week of gains. The WTI is up 9% this week, which is the best weekly gain actually in last 2 years. So that's the kind of run-up that we've seen in crude. And some profit-taking, of course, as the optimism rally after the US-China talk is fading, as the markets did not see any concrete talk, any details coming out of that, and that really seems to be bothering. Apart from that, everything else seems to be going well for crude. You have the OPEC and the allies cut. The Saudi Arabia wants to cut more. The U.S. inventories seem to be stabilizing. There are statements from, a couple of banks and anticipating the crude oil prices to hover between $60 to $70 per barrel for the Brent prices for the rest of this year. And then, of course, you also have the view coming in from OPEC members where there is an expectation that there could be involuntary output cuts as well. And the demand from Asia is expected to be on the stronger side. The speculative money seems to be moving in. So all seems to be going well for crude oil prices. Even if we don't go too high from here, the expectation is that we will consolidate around these levels. A quick word on the metal space as well, where we also have seen some profit-taking coming. Most of the industrial metals declined between 0.5% to 1% overnight, and this is on the back of not too clear data that came in from US and China. And the Chinese purchasing producer index also saw the lowest gain in last 2 years. So the Chinese numbers continue to come in weak, weighing onto the prices.
Right, Manisha, thanks a lot for that. So consolidation for oil prices may continue over the next 10 to 12 days. Just keep an eye out on whether that consolidation continues onto our equity markets or not as well, because data so suggests, because in the past we have been trading in a range for the Nifty, and yesterday, if you take a look at the FII flows, they sold in the cash market 345 crores. Over the last few trading sessions, it has been alternate buying as well as selling by the FIIs, the domestic institutional investors, to put in about 11 crores in the cash market. But while the Nifty snapped its 4-day winning streak yesterday, the Nifty futures premium spiked from 22 points to about 36 points, and that's telling you that there was purchase by the FIIs in index futures. The data confirmed that, and there was a purchase of close to around 426 crores. But despite that purchase over the last 2 trading sessions, the FIIs are still net short on the index. Their long exposure stands at around 49%. So let's see where we go from here. More important will be to cross the 100-day moving average, and the SGX Nifty is positive. There was a 2,000 crore purchase in index options. However, remember, yesterday was also the Nifty Bank weekly options expiry, which is why there were high volumes out there. In terms of the active Nifty strikes, keep an eye out on the 10,800 mark, which will be very important as far as the support is concerned. That's the 200-day moving average. And on the upside, the 11,000 call, which also has the maximum open interest, was fairly active. About 3 lakh shares traded out there for a premium of 80 rupees. That's telling you that for the near term, the street believes that 11,000 as that psychological resistance continues to stay.